impulse, right? Oh, yeah, cool. Likely what we're going to see is a 15M pullback, right? But then 15M goes bullish and everyone's like, oh, it's going to run the high, but it's not, right? Because H4 is bearish. So what we want to look for is the shift in M15 structure, right? Or, lower time frame structure if we hit very specific areas. But really what we want to look for is that shift in M15 structure. And then we can say, okay, correction's complete. Now we can short, right? And those shorts are always going to be much easier trades to take because they're pro-trend, right? Like, EU over the last couple of days has been a great example of it, right? Where is it? This one. Right. So, if we just look at it, and one thing is just zoom out, there's nothing wrong with occasionally just zooming out on the chart and looking at it like that, right? Like, look, all that happens, right, is we've got this bigger picture, like structural play here of this lower high, right, has formed this low. So the idea is that either this low follows through and takes this high, and then we potentially see some sort of bullishing, right? Or we don't take this high, which we fail to, right? And then we just see the whole way down, right? We just get impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, break of structure, right? Then we get one more impulse, two more impulses, but this impulse is weak and sort of half fails, right? Just runs to low. We get failed correction, right? And price continues to impulse, correct, impulse, big correction into huge impulse and huge bearish impulse, because obviously the larger time frame structural play at that point in time is to come back into this range here to mitigate something to then follow through and potentially run this low, right? That's what we'd be thinking now, right? But even when we just zoom in today, like when you're looking at it, and this is like, without like looking at structure like, oh, this high, this low, this is swing, this, like, just zoom out and look at it like this, right? It gives you such a better picture of what the market is likely to do, right? Like here today, right? When we get this, right, to this, and this low goes, right? Is it now logical in the short term, at least? Yeah, like in the future, what we might do, right, is come down into something like this to give another impulse, because this high has sort of formed some form of liquidity. So that is something we could potentially see, right? But once this low goes, is it likely now that this high will get run? No. Right? Yes, okay, we didn't mitigate anything, but what we did for a start, we mitigated this, right, which is daily, right? We missed this mitigation, yes, fine, cool. But we form a strong high, right? We run this high here, right? Yeah, okay, we can say this hasn't broken like swing structure all the way down here, right? But it's broken a significant low within this pullback, right? Like this is a significant part of this pullback, right? Price breaks it. What does price do? Comes back up, retests the supply level, off it goes to hell for the rest of the day, right? So although here, yeah, we can definitely take trades within this to go long, right? That's absolutely fine, right? But are these trades likely to take out this high, right? No, they're not, right? So find a hedge, right? Or find a TP level, right? But it's always the same thing, like whatever time frame you go on, right? Like even if you go on daily, right? Look, impulse, correction, impulse, correction, impulse, fails to put in a high. What happens next? This low becomes weak. This low gets taken. Yeah, we see all of this corrective price action down here, because this is obviously this is a whole weekly range, right? We're trading at discount of it at the moment. You're not going to see massively, like after seeing this drop, you're most likely not going to see just that, right? Like this is going to put up some form of resistance because it's broken this high here, right? So we're going to see a push off of here, and then that fails to put in a new high above here. So we see another impulse, correction, bigger impulse. Now we're seeing a correction to potentially a bigger impulse to come down and mitigate like these levels down here, right? Like just zoom out and do this shit.
Sam, I don't think anyone can hear you, mate.
The sheep have tubed through the Wi-Fi connection.
That's it. It's not just me then. No one can hear him. And it's froze, right?
Yeah, no one can hear him.
Well, the hose, right. That's what happens when you live in the woods. Right, I have to invite him back in, I guess. I just messaged me saying his internet's died, he'll be back. Okay. Does everything make sense at the moment, though? It's pretty straightforward.
Yeah, man, all good.
So you know, bro, what you got for us?
Let's see if I can share my screen. Wait there. Let me see if he's coming. Can you see my screen?
Yeah, mate.
Cool. Where are we? Let's just see if we can move his panel. Let's just talk over this trade today that I took till he comes back. Oh God, now my internet's on there.
Yeah, sorry about that. My internet decided to die. Can you all hear me now again? Oh, sorry, Lewis is chatting now.
Wait, no, wait there. Can you hear?
Yeah, you're good. We can hear you.
Yeah, sorry about that. But one of the pigeons that runs my internet decided to have a heart attack or some shit. I don't know. The joys of living in the countryside. What did you guys last hear too?
Right.
It happens on every time frame.
Yeah. So yeah, it's basically valid on every time frame, right? Like you can look at daily, and it's just how you build narrative, right? Like here, even this short here, right? If we look at this from this perspective, always is this lower high gets put in, right? This lower low, and it's like we can. And ah about like, this being a swing high, right? Because it creates this low. We can and ah about this being a strong low, this, that, the other. But it's about zooming out and seeing that bigger picture play. This whole thing here, right, is a perfect example. Okay, we have an impulse, right? So where's our last range? Well, our whole last range is this, right? So I can't remember who I was saying to, but I was saying, like, here, right, what I'm looking for is, like maybe this level, right? Not that this is a good POI, but yeah, that's neither here nor there, right? Or something within here, or, something, these wicks, something like this, right? These are the areas that I'm going to be happy taking like 1M or sub 1M entries on, right? Like, because we're just seeing that bearish structure and now we're playing from a nice POI, right? But once we see that shift here, right, the likelihood is as soon as this fails, right, and it fails with conviction, right? Like, they don't mess around, like, they don't tickle this. Do you know what I mean? They just smash through it, right? Once this fails, the likelihood is that now we have new supply, change structure here. So once this low goes, almost, honestly, I'd probably give that 99, like 98.5, something like that % of the time, this high will get a reaction and follow through and take at least this low, right? Like, it's like the probabilities of this now being run are so small, right? Because we've just seen this. Like, you've got to think about when you see intent like that in a market, right? Structural intent, right? To break things like this, right? This is a significant move in this market, right? Once we see that just get smashed through, right? Think about, try and think of it in like monetary terms, right? It costs somewhere in the region of 10,000 pips, 10,000 lots to move EU a pip, right? So here we've done, so someone who's good at maths, what's that? 180,000 lots there, right? Followed by another 100,000 lots up, right? Followed by another 200,000 down. So what's that? 480,000 lots there, right? Are they going to let that get taken out? Most likely not, right? So that high becomes the failure of this correction, right? So we can just trade away from that. And if you look at it, even over here, this is another great example of it, right? Here, right, we have this whole impulse, right? Yes, we have what we would classify as structural points within this, right? Like, we have this low, we have this low, we have, this demand zone below here, we have this demand zone here, right? But structurally, all this is, we can classify this as one push to a sell-off to another push, right? So until this fails, right, the likelihood is that this high is getting taken, especially when they form liquidity above the high, right? So then we start seeing this correction back, right? We come into this first structural level, right? And because this would be classified as a strong low, we get a reaction, but the reaction fails to follow through, right? It doesn't take out the high, right? So as soon as we see like this shift here, right, because that disrupts the order flow in there, we know that likely this low is going to be the target for this whole move, right? Because this is part of this bigger correction, and it's really important to understand that this is a bigger correction, right? This likely isn't going to lead up to this being taken, right? Because this has failed. This low fails to create a new high. So this low structurally is weak and ends up getting taken. But because we're in this whole correction, we see all of this fuckeries in the middle of the range, right? Sorry, I'll just scribble over that chart. But yeah, then it's like when we get down here, right, we need to be reading that this is the impulse, right? So it's that market facing, right? Here we're in impulsive phase, right? So we can take buys from the ranges, right? Then we come back, we have this corrective phase where these are like, this is so much harder to trade continuations in, right? Because you don't know what price is going to leave off. Sometimes it will leave off this extreme. Sometimes it will leave off like here. Sometimes it will leave off here. You know, it could do a bunch of different things, right? But once like this has failed to follow through until this low gets taken, right? The objective is that low, right? But then once we start getting down here, right? Yeah, sells in like from, you know, sells from here, sells from here, sells from here, sells from here. They're all good trades, right? But we need to understand that these are now not going to, or the probability is very low that these are going to continue that run to the downside and take out this low, right? Because structurally, this high is still weak. So once we start seeing shifts in order flow like here, right, we can take a long, okay, doesn't follow through. Right? Hey ho, such is life. You know, it's not mitigated anything either, but yeah, whatever, that's neither here nor there. Like, then we see this mitigation here of the demand level, right? The significant demand level that causes essentially like it's the extreme of the whole move, right? Once we see the mitigation there and we see this correction, right? We see this low, this low, this lower high, this lower high, this lower high gets taken, price does 100 pips, right? In the space of like 4 hours, something like that, right? Then we need to be looking at it like this as well, right? And understanding that we're also, as well as being in this phase of the market, so this long here is pro-trend and high probability, right? We're also within this bearish phase, right? So this is the H4 pullback of daily structure, right? So now, once the H4 low fails, right, and we can start, you know, we can say, yeah, this is 12H supply, you know, it's a good supply level, it flips this low over here, all of this stuff, right? But once we then start seeing these levels get disrespected, right? Now is the likelihood that this is going to come from something like this and run the high? Probably not at that point, right? Because we've seen this get taken, which realigns 15M with daily, right? And if we're looking at this as like a whole thing, right? We've got a daily thing like this, right? So now what we're seeing is the H4 pullback of the daily leg, right? And then at the top, we see the M15 shift in favor, which is the first sign of this 4H pullback failing, right? But it's all about understanding that from different time frames perspectives and not just sitting on the one and like during session, right? And going, oh, okay, well, you know, over here, right? Like, oh, over here, okay, cool. We've had a change of character here, right? I'm going to take a long to now take out this high, right? This long is a good trade. Like, it's a really good trade, right? But it's a pullback trade, right? That should have a target, something, you know, like that supply level there or the high above that, or, you know, this supply level here, something like that, right? Great trade. You know, if that's the only trade you take the whole week, the whole month, right? It's a 1 to 10, you know, but it's just understanding that all we're seeing here now, again, right, is this impulse, correction, right? Low goes, right? Mitigate something as well. Low goes, off we go to health, right? And then we sit again. Impulse, correction, okay, correction fails, fine, okay, another low goes, get back in there to continue that impulse down. All right, and then look, again, all we've seen here, impulse, correction, continued impulse. Right? You know, and like maybe it's just to do like a nice simple video about like swing structure. Wait, hold on, let me actually ask a question. Does everybody here understand the like 4 different types of structure that we talk about? Swing structure, minor structure, substructure, and changes of character. Does everyone get that, or is that something you'd like me to run over? Honestly, please, like, guys, do not feel like dumb or anything if you don't understand it. Like, ask the question, you know, like it's the best time to do it so we can actually answer questions about it as well. Like, if everyone gets that sort of stuff, then that's perfect. But yeah.
Can you see the question, Sam, or not?
No,
chat?
I can't, mate. No. Sorry, I haven't.
Someone sometimes gets confused with M-boss and S-boss.
Okay, so
just run through that.
Yeah, I mean, essentially, right, like anything we look at that isn't swing structure is like internal structure, right? So it's smaller stuff, right? So when we are looking at, you don't actually get true breaks of substructure that often, you know. Oh, sorry, you can probably hear my puppy. Good boy. Substructure break. Here's a substructure break. Actually, no, because that breaks something to the left. Like real substructure breaks are actually pretty rare things from what I've seen. No, you're not going downstairs, mate. Stay there. Substructure. Okay, if we said this, all right, let's draw it. Probably easier, right? So substructure, right, is stuff that is contained fully within a leg of price, right? There's nothing in this leg over here that we can break, right? So minor structure is, this would actually be a break of substructure here, right? Because we have this one push here, right? Then down, we create this low and then we break it, right? So this is a substructural high, right? Minor structure is when we have something to the left, right? So we have something like this, but it's not something we classify as swing structure, right? So minor structure and changes of character are often the same things, right? So like here for me, right, I wouldn't classify this as a 15M swing break, right here. But this is a break of minor structure, right? Because it's in a previous push, right? You see how here, this is contained within this leg of price. So we go up, we form no low here, right? So this is all one push, right? Then we come here, we get a break of substructure, right? Whereas here, yeah, here, this would be minor structure as well, right? Because it's all contained within like this whole leg of price here, right? So here we have, if we take away what's happened to the left, but here we have our swing structure, right? Low or high to low to high to low, right? So now we have like a little minor break of structure here, minor break of structure here, minor break of substructure here, break of minor structure here, break of minor structure here. These are all just like little shifts in order flow and stuff within this whole bigger swing leg, right? And then we get the follow through from the high, basically. All right, so substructure is all contained. Minor structure breaks something to the left. Make sense? Probably help if I could see the chat box.
No, I think that's good, mate. I think they understand.
Yeah, cool. Could you run through?
There's not really been any
Different-
questions.
Different between Chotch and Emboss. Chotches can be very small, very insignificant things, right? Like a Chotch could be an inside bar, for instance, if the story is right. There was a good example of one the other day, actually. Like this, I'd be hesitant to even classify as like an emboss. You know what I mean? This is all basically one continuous push. But because this is a range, right? This is the change of character. Right? Or like, there was, I can't remember when it was, or like here, this would be a change of character, right? Here to here, this high, this low, this high, this low, this high. But really, we wouldn't want to classify that as anything like, unless we're trading from very good areas, all of that sort of stuff. We wouldn't really want to classify that as anything apart from a change of character. Does that make sense? Yeah, cool. Perfect. All right, cool. I mean, like the thing I really want to get people thinking in is like really simply, right? Like just strip it all back to like impulse correction, right? Like as dumb as it sounds, because that is all we're fucking witnessing the whole time, literally the whole time. It's all we're ever doing is we're doing this. Oh, sorry. We're doing like, you know, this to this to this. Right. And if you start reading it like that and not like really trying to get super technical about, you know, this and that and the other, right? And like, oh, but you know, this like, or getting tied up in stuff like this hasn't mitigated something, right? It's like react to what the market is showing you, right? Like, because this isn't a trade you want to miss. Do you know what I mean? Like this trade here, super simple to get in, right? Like, if you know, if you just break this trade down, and it's why it's so important to focus on like recent price action as well. Like don't get too tied up in what's gone on to the left if you're seeing something else, right? Because it's like here, right? Okay, cool. What happens? Right, well, we run liquidity here, right? Cool. So, right, like what's our structural idea at this point? Well, our structural idea is that we're likely to see a run on the weak H4 low, right? That's the idea, is that we're going to take this out at some point, right? Then we see, you know, this low to this high, right? Once this low goes, right, the idea is that now what we have seen is that shift in order flow, right? So now we're going to get a retest. Right, and a church like, I mean, sorry, that's an internal. I would class this as an internal buff, and that's one thing I've started sort of doing is not really focusing on whether it's sub or minor or whatever. Like, is it internal or external? I still like classify it all, but do you know what I mean? Like, this is, to me, this isn't a break of like swing structure, because my swing structure, right, like my bigger picture play at this point in time is. Is this to this to this. This is what I'm thinking, right? So these are my swing points, right? But this is definitely structure, right? Like internal structure to the range, right? So once that goes, we're now likely to see this pull back, right? We can find a very nice supply level there, right? That literally, like if we went over that POI checklist, this has everything, right? Is it a buy to sell? Is it visible on 15M? Yes. Does it run liquidity? Yes. Is it a buy to sell? Yes. Does it have inducement? Yes. Is it in the premium discount or something relevant? Yes. Right? Literally everything we want. Get really slow corrected breach trace to it, right? And then all we want to witness is that same shit happen on the lower time frame, right? And then we can get in this on, you know, whatever time frame you so desire. But cool. Now we see this gets mitigated. This happens here. We see this little range form here, right? Logos, right? So at that point, your only job is to find an entry. Now the market's showing you what it wants to do at that point in time, right? Wick break or no wick break, like whatever. At that point, especially there, it commits properly. Right? retest the area here that breaks the range. And yeah, we've got arguments of saying, okay, but we have this wick above here, we have this wick above here, right? But here, none of it's done anything, right? Like this breaks the structural low, right? Price comes back into there, and there you go. Like even if you do that, well, even with that, it's a 0.8 pip stop. Like you honestly, like at this point, you can either like give it a pip, or you can cover that, right? For me, I wouldn't bother doing that because I'd think, well, no, I don't want to cover that high because I'm greedy. But yeah. And then price just continues to melt up, right? And if this is the only trade you take all week, right? And you just target at that low, there's a 1 to 11, with a 1.5 pip stop. Well, you've just waited for one good setup, right? We're not trying to be clever and catch like this, which doesn't really mitigate anything, like all of this stuff, right? Like we need some inducement, all of this stuff, right? Like we can build other confluences on top of confluences on top of confluences, right? But all we've seen here is that happen, right? Impulse, structural low goes, retraces back to the first level that breaks significant structure over here. Right? Market changes structure again and dies. Right? It's one of the hardest things to get in your head that you need to work with structure first, right? It's why, like, when I tell you to build a story, right? Like, or you always hear me say, first of all, is your structural idea, right? Are you thinking you're going to put in a lower high? Are you thinking you're going to pull back? Are you thinking you're going to put in a higher low, right? That's basically your three options, right? And that is not just from like a one time frame thing, right? That's like, okay, here, right? So if we look at this like top down today, right? Structural idea, right? We are likely to see a 4H lower high, right? That's what we're likely to see. I think we can all agree that without like a shadow of a doubt, really, right? Where that comes from now, I mean, this may well move against us and come back up into here, right? But we've taken partials on the way down, we've hedged it, whatever, right? But the structural idea is that we are going to see a lower high, right? Does supply and demand make sense for this? Well, we have one massive supply range here, right? So now does liquidity agree with this? Well, yep, we've run all of this, right? And we've built all of this. Right, so liquidity would agree with us that it's probably going to absolutely collapse at some point this week, right? So now that's enough of an idea to start working with, right? So now we can go down and just execute that same thought process on the lower time frames. Right, and we can go, okay, at this point in the day, right, we have seen this low gets taken here, right? So now coming into New York, what's our structural idea? Well, our structural idea is that we've broken a low, so we are likely to see a lower high, right? Okay, supply and demand levels. Okay, is this valid? Well, for a start on 15M, not really valid, not engulfed. But it's visible. Yeah, okay. Liquidity does this. Like we have two levels here, right? We have this level and we have this level, right? Now, does liquidity agree with this bottom level? Not so much, right? Because it's got no point of liquidity into it. We need to use this as liquidity, right? So yeah, there you go. There's a trade. All right, price comes back, taps in, and off it goes on its merry way. Right? It's really like the same thing over and over and over and over again. This is a beautiful bit of price action to look at, to be honest. Like, but it's always the same thing to a greater or lesser degree, right? And it's just trying to get into your head that when you're building a story, when you're building like narrative, right, the first and most important thing to look at is structure. What is your structure idea? If you don't have a structure idea, leave, go and find one, and then come back. Right? Because there's no point in just looking at this and going, okay, well, right, so after this low goes, right, from a supply and demand perspective, right, not from a structural perspective, from a supply and demand perspective, I expect this mitigated, because then you're fucked, right? Then you spend the whole time trying to buy this, taking break even, taking L's, not wondering, like always thinking about, oh, but you know, the market needs to come and mitigate this. Structurally, it doesn't at that point in time. Until we see another shift in 15 ohm order flow, it really doesn't. Right? Like it's, you know, structure is king. It wins every time. Yeah, cool. Well, I don't know. Has anyone got any questions about that bit?
Yeah, could I ask a question on just general PA at the moment?
I would, what, like structure? Or
yeah, it's just about the impulse correction stuff.
Yeah, far away, Suki.
Yeah, do you mind if I share my screen?
No. I don't know whether you can or not, mate.
That's right, I know it is. So do you know how we've had this pushed down? Like,
no, you should be able to now, mate. Share screen.
Right.
Oh, it's nice to have Suki on a call, actually. Hello,
Why?
Suki. I don't know, I just missed you.
Right, okay. So, like, if you're looking at people, like, I was just marking something up as you're talking about impulse and corrections and stuff.
Mm-hmm.
So, do you know, like, how, obviously, we've had this massive push down from the 4 hour. And yes, you could be right in saying we could see this low going, like, pushing down with the daily in mind and everything. Obviously, looking at how prices, like, moved today, we've not really reacted off something clear here. And obviously we've got this 15-minute supply up here.
Yep.
Could we be, obviously this could be a bigger complex pullback. Like obviously I've got these.
Could well be, mate.
Yeah.
Yeah. I like you're going to ask, could we now see, could we now see that run basically, right? Like could we see this high run? Yeah, very definitely, mate. Very definitely. Because we have, like, this is the other thing, right? You're always working within this, right?
Yeah.
Like here, right? We have seen impulse and now this could be the correction, right? To this to continue to come to take out this liquidity, mitigate something in premium, right, and then die, right? That very definitely that could be what happens, right? Because I would have like you, I would have expected this to come from something to the left, right? But we can only play with the information that we've got, right?
100%.
Like so here, say you're in shorts from like here. Right?
Yeah.
Something like that here, wherever, right? And this hits like in session, right? You can definitely look for, you know, potential longs from here somewhere to run this as a hedge, something like that, right? But the idea is that you're already short.
Yeah.
You know, because that is like the bigger picture play is that we're getting that, right? So yeah, we might get like this to this to this to, you know, complex pullbacks are fuckeries at points, right?
Yeah.
Why they're complex pullbacks. But yeah, like at this point in time, right, until really like, if we get a change of character, well, we've had a change of character here actually. So yeah, that's probably why we're seeing this little continued run here, right? But until really we take out this bigger high, we can't really say that's committed.
Yeah.
Do you know what I mean? Like we can say, we've seen a little shift in order flow here, cool. But once this gets taken, we can say, okay, cool. Now we can really start to look for, like, say you've got in the trade here, right? Say there's an entry here. I have no idea whether there is.
Yeah.
But like initially, your target shouldn't be above sort of this.
Yeah.
Right? Once you take that trade, right? Say you partial out 50%, something like that, right? And then that continues to go and run, right? Then if you get in a trade back down here somewhere, then cool. That one you can hold to run this high here.
Yeah.
Right? Because now this high is weak, has not broken swing structure. We've seen a significant change of character back. That's likely going to be used as liquidity for a future mitigation up here somewhere.
Yeah.
Yeah?
Yeah, makes sense.
Right. And there's always, like, you know, it's always difficult to, it's always easy in hindsight at the end of the day. Like, that's the thing, right? We can say all of this stuff afterwards, but it's trying to build those possible narratives in your head during the session or before the session, right? What could I see? What is the likelihood of X happening? What is the likelihood of Z happening, right? Like here, Rishab took, I think a couple of other people got in a trade here, right? Which is really good trade. Really, really good trade, right? Like it does 1 to 10, something like that, right? But I think a couple of people held it to run the high, whereas RSN just took all this profit at 1 to 10.
Yeah, I didn't close enough.
Yeah, but it's being aware that right now, right, we have a strong high here, right? So likely just take all your profit here until this commits and takes the high, right? If that does, then, you know, that's what's happened. Be fine, you know? Like here, the likelihood is that this is not going. The likelihood is that this is going.
Yeah.
Right? Because we've had this structural sort of play happening here. Right? So now the likelihood is that we're coming back down to mitigate the unmitigated range, right? What have we got that's valid? This.
Yeah.
Right? That's the only thing really. Right? So that's why we're now seeing this push up from here. But even this is forming like shit at the moment. Right? So, you know, like one thing we'd be looking at here is like maybe this to this, maybe. You know, maybe we come lower into this, mitigate something more specific within it, right? Run this liquidity, and then we see this pump up here.
Yeah.
Right? But it's all about like monitoring that like aggression and stuff like that, right? Like when you're looking at this, right? How does a good high form? A good high forms like that, right? How does a weak high form? Right? Well, a weak high forms like that. Right? How does a weak low form? A weak low forms like that, right? So if you're getting in trades here, how is this low formed compared to this high? Which one here is more likely? It looks more likely to get run, right? All of this liquidity here looks far more likely to get taken out than this high, right? Because this high has formed aggressively.
Yeah.
Yeah?
Yeah. Solid. I'll stop sharing.
Cool. Anyone else?
I don't know if it's in the topic though. If you could just like go through once again the high and the weak, the strong and weak lows. Is it okay?
Yeah. That I would class that as part of structure, really. Okay, so when you're looking at weak highs and weak lows, right, a big part of it is how they form, right? Do they form fast and aggressive, right? Like, so here, right, this high, right, if we look at this is a good example of it, right? This low forms really fast, really aggressive, right? We run these lows here, right? And they generally form via a run on liquidity, right? So you'll see like a build up of liquidity, right? That liquidity get taken out, right? And then a continuous move to the upside, right? Which is exactly what we see here, right? Then this whole high, right, just gets tested, right? Forming whatever you want to call it, resistance, right? So that forms all of that liquidity above it, right? So like even here, right, you notice how down here, right, how can we say with reasonable confidence, right, because we're looking at all of this momentum to the downside, right? Price mitigates an already mitigated level here, over here, but once this little high here goes, right, this change in order flow, how can we say with some degree of certainty that this low will form? Well, look at how it's formed, right? It forms really aggressive, right? Now this whole low as a whole has not formed well because we kept testing it, right? So now we formed liquidity, right? Like if this was going to continue up to take out like these highs, right, which is possible but unlikely, right? This should have just pinged off like this and started mooning straight towards it, right? Now here, if you look here, right, look at how this high forms. We generate liquidity, right? We run that liquidity. We form fast and aggressive to the downside, right? Like just one push basically. And then this low here initially forms well, right? So we can probably get in a trade like here or something like that, right? Because we do get that initial pop, right? But then it comes back, tests, comes back, tests, right? So then that low has not formed fast, right? Like here as well, right? Like if we look at this high has run this little bit of liquidity here and dropped off to the downside, right? Now this low is starting to form really slowly again. Right, so likelihood is that this high will probably get respected to drop down, maybe to mitigate this 15M or something. You know, we've got equal lows here. Maybe it comes below, mitigates this wick. You know, what makes sense? Yeah, probably this wick. I would say personally, that's what I'd be looking at. Because this doesn't do anything over here. Right, this wick is unmitigated. Yeah, I don't know, something like that. I'd keep an eye on this as well, just in case we do like shift 15M order flow from here. But again, it's like now it's, yeah. Like, I went a bit off topic there. Does that make sense about strong highs and weak?
Yeah, it does. I mean, I rewatched the stuff you guys posted in the content. I think it was Lewis speaking on that video. So I watched like a bazillion times. Yeah. So I just wanted to sort of, make sure that there's.
It's like, does it create something, right? That's another big question, right? Like you see this high here, right? Like this high creates a low. This high creates a low. This high creates a low, right? So until this stops, basically, because this is big enough to like class a change in character or something. But again, you need to look at, it's this whole thing of just sometimes like people get lost in technicals, right? Like going like strong highs and weak lows, stuff like that. They're a lot for me, like about a visual thing as well, right? Like how, like right here, like this is a great example, right? Right here, this low forms over the course of like 3 candles, right? Whereas this high forms in 2, right? 1 dead, right? This low comes back to test again. So this low looks like weaker, flatter, right? So what I'm expecting is a mitigation of this and then a continuation down.
Yeah.
Make sense?
And obviously, if the last high or low gets taken out, then we switch to long. I mean, as one of the options. Yeah. Okay.
Exactly. Yeah. If the last low high gets taken, then we start looking for longs.
Yeah. Okay. Thank you.
But sorry, like longs aren't wrong in this market, right? That's something I really want to get across as well, because it is very much, right? Like this trade here, I think you took this as well, Jan. I'm sure I saw you post this trade here.
Yeah, I did post it. I didn't enter it though because I hesitated, but yeah, it was pretty good.
Well, fair enough. Yeah, it's a good trade. Like it's a really good trade, right? We've shifted order flow, right? We've got an SD flip. This comes from a really nice run on liquidity. It's a nice aggressive reaction. We've got an impulse. We've got a correction, right? This trade from here is really good, right? But the important thing to understand is that this trade is a pullback trade, right? So this trade, if we're getting in here, for instance, right, our target is not this, right? We are not expecting this high to go. What we are expecting is like the mitigation of this or, of this potentially, right? Like of the 15M supply, which would be those wicks there, right? That's the expectation, not that we take out this high. Yeah?
Yeah, absolutely. No, it makes sense. I think one of the things for me as well today was the targeting. Sometimes we over-target and then we just miss out because, realistic targeting is so important, basically.
Yeah, but this is where it really comes into... So, like, when you're managing trades, it comes down to the most important question is, are you pro trend? Are you counter trend? Right? If you're counter trend, your target has to be within that swing, right? So like this, for example, right? Let's just draw this up. Right, say we're counter trend, right? And we've come up and we've done what we did today, right? We run a high, right? We drop a low, right? Now say we find a trade down here, right? Our target is within this, right? Within this high, this low, right? Don't make it like too ambitious. Don't target like the extreme or something, right? Find what broke structure here, right? Or find a nice level of liquidity, something like that, and just get out of the trade, right? Here, when we're trading this now, and we come up here and we find a trade here, now we can expect new structure because we're pro-trend again, right? If you're pro-trend, you can expect new structure. If you're counter-trend, you can't. Unless you've got an awful lot of confluences, which you do get in trades like that, of course. Like you can catch some fucking crazy reversals from time to time, right? But like this trade here, we've got this to this, right? So our target has to be within here, right? So we can either target this or we can target a mitigation above that using that as inducement, something like that. Or we can just target that high basically, right? And the liquidity above that high and just say, cool, that's done, right? Because it's a good trade, you know, like honestly, it's a really good trade. You know, if you were a proper smart ass and decided to, you know, take the EQ of the wick or some nonsense like that, well, not nonsense, it's good to do that sort of stuff, but yeah, and you had like a pip of stock, right? That's a 1 to 15, you know, it's you done for the week, a month, whatever, you know, like if that's the only trade, if this is the only time you get onto the chart, you don't want to miss out on a trade like that. But it's important to know where to target it because you need to understand that you're counter trend, right? And this is why I always bang on about structure so much, because it literally leads to everything, right? It leads to your targeting, it leads to your supply levels, it leads to your whole narrative within the market, right? And that's going to get you on the right side of the market so much more often than not, right? And it's going to, not only that, it's also going to pay you for your trades, right? Because you're going to understand that this trade here, right? Oh, I'm holding full volume till this high goes. The trade runs to 15 and takes me out for break even. That's fine. No, it's honestly, at that point, it's not fun. In all honesty, Suki, and at that point, right, that's a mistake. Simple as, right? Like, it's a fucking good trade, but you made a mistake in your over-ambitious Suki target. That's why I always fade you, bro, because I always know you're going to go.
100%.
Yeah, I'm 100% for fading you, I think.
I'm still holding this too long for yesterday.
What are you? Where did you
I was expecting that. Like my target was, where I took those longs today, was target the next 15-minute supply. That was all it was. Like with those two, I wasn't expecting ridiculous R.
Yeah.
Well, it was good R because it was a 1 pip stop, so it would have been like
1 to 15, mate, is what it would have been.
Yeah, it would have been. Yeah, it would have been to there. But I mean, like, if I targeted like the 15-minute supply to the left, if you know what I mean. So I was expecting high to be run.
Yeah. And if you were sensible, Suki, and you fucking screwed your head on, and you didn't do some fucking madness, you'd be all right. Do you know what I mean?
Yeah.
But you see what I mean, right? Like, because that's like, honestly, I want to draw this into people is that is a good trade, right? It's a really nice trade, mate. Like, there is absolutely nothing wrong with it, right? But it needs to have a target within the swing, basically, right? Because this is sort of what I mean about getting so tied in to going, okay, well, this is our swing high, right? This is our swing low. So nothing in here really we count as structure, right? This is all just noise and nonsense, right? Because no, we have internal structure to that range, right? Like this would be clean 5M structure or whatever. You know, like if we went and looked at this chart on 5M, I'm sure, you know, this break over here makes more sense on the 5M, right? Here we have a low, here we have a high. We get a break of structure, off it goes, right? But then we break swing structure on 5M, so now likely that's going to follow through and get a bit of a reaction to the downside, right? Whether we come back from this or not is wait and see. Likelihood is we wouldn't, that would be the likelihood. But we've got other factors along with that at the moment anyway, yeah. Any more questions? I do fucking waffle on, don't I?
No, just to confirm them before kind of anybody else asks. So the main definition, or like the main way you decide you're in a pro trend or a counter trend, except of like the obvious things, we see structure and everything. But if you need that extra confidence, when you're just sitting there and you're like, oh, I don't know, maybe I'm in a counter trend. Sometimes you doubt yourself. Would you say the daily could be a good point of like being more sure when you have the doubts whether you're in a pro or counter?
Well, yeah, I mean, like anything, yeah, but then you end up cutting code short. Yes and no. Like really we're always looking at that sort of daily, the daily 4H picture is the most important.
Okay.
Right? But really when I want to look at, whether I'm pro trend, whether I'm counter trend, right? It's just look at the impulse correction, right? Like, so here, right? Anything, like even when we're looking here, right? Anything here is technically still pro trend, right? This is pro trend. Even these longs here, they're pro trend, right? But we have other stuff working against those running that at that point in time, namely this week low, which they're trying to mitigate out of for whatever reason. But yeah, mainly just look at zoom out and look at this significant structure, right? So
Sam,
like this, yes.
Can you hear me okay?
I can, mate. Yeah, sorry, dude. Go on.
Just on the topic of that, if you take, say, the daily picture quickly, just because I'm thinking of a good argument for why that could be your lower high on the daily chart.
Why? What this would be the lower high here?
Yeah, because that in itself is also, that's also run liquidity to the left. Just just here, right?
Yeah, like this. Yeah,
and then this is weak. I'm sorry.
Yeah, this is all weak, right? We haven't broken any structures to the upside, right? If you just look at the intent, mate. Like literally, sometimes you just got to take everything off a chart and go, okay, well, this is the biggest daily candle we had in. I don't even think this. I can't. Maybe the election candle. How many pips was that? Yeah, that was the last time we had a single daily move bigger than this. I remember I measured it because I was talking to Lewis about it, right? The likelihood is that they probably
going to take this, right?
Out. Yeah, exactly, right?
And then obviously
until we see some significant shift in order flow. No, go on, mate. What were you saying?
I'm saying the argument there with the aggression in and out of the last supply zone here, right? Those buy to sell wicks. Yep. Which, by the way, I think if you were to look at in terms of premium discount pricing, it hasn't even tapped equilibrium of the daily swing range.
No,
right?
I didn't. No.
But then obviously you wouldn't argue, oh, we have to go and mitigate the EQ. So therefore
I would
buy,
never
because the bigger picture is, that's
like
it's kind of like the more likely thing at the moment is that.
Yeah, exactly, right? It's always this thing of
and that this reaction fails.
Yeah, exactly. Like, it's why one really important thing is to understand that, it's what I always say, right? Structure is king, everything else is complement, right? Like, structurally, we're expecting the lower high, so until I see this high go, right, I'm going to be shorting the shit out of this. Any opportunity I get, any reasonable opportunity I get, I will be taking shorts to run this low, right? Yeah. Because structurally, that's what makes sense, right? Like we've seen this go. We've seen a little reaction to this, but this hasn't really broken anything. Like the reason we're seeing a reaction to it is because this did break a high, right?
It's kind of like a substructure high, isn't it?
Yeah, exactly. Like it's like minus. It's a minor structure high, right? Mm-hmm. So until we see that high now fail after seeing that aggression, right? I'll still take longs within that. You know, like if we came down into here, I'd happily take, you know, longs within here, within this wick, stuff like that. Yeah, 100%. Because we don't know.
Also, right? I think this is the daily. This is all a daily supply level, right? So if you look at the EQ of that, you could argue you probably get into this level. Yeah. So therefore, we could hedge from there to then.
Yeah, very definitely. Very, very definitely, right? It's like what me and Suki were saying, right? Like here we've got this. There's definitely an argument for this coming long off of here to take out, like, because this high didn't form. Now it's not formed so beautifully anymore, right? Like it hasn't really, you know, we didn't get something like run on a high, drop, and then just melt off, right? It's not done that. Right. So there is an argument for saying, okay, well, this could be like that impulse. This could be that correction to come and run this to move up into these supply levels up here. You know, even this one up here is really nice. You know, we could come all the way back up there. Who knows? Right. So it's this whole thing of not having a bias over buying or selling.
Yeah.
Right.
But then the intraday plays, you're safer off pulling 80% partials here because there's unmitigated levels and liquidity here.
Exactly.
And not to leave a large percentage.
Exactly. Like that's what that whole management flow chart's built around, right? Like one of the questions we ask in that is, are you at the top 30 or bottom 30% of the range, right? Here, we haven't even hit the EQ, right? So anything that you get in here, you need to be looking at partials, like, you know, within here, right? Yeah. Say you find a short here, right? The next unmitigated demand level is here. So this is where you pull partials, right? Because we're not taking the trade from up in this area, right? We still want to leave a little bit on, just, you know, in case, right? But yeah, if we're getting in trades up here, so that would, you know, give us this. This is probably the nicest thing, I would say, right? So if price gets up there, that's the one you're almost definitely, and you get a nice entry. Because again, at this point, you know, who fucking knows, mate? Price could well come and take out this high, you know.
And then your long hedge is done very well. And you're happy about that.
Exactly. Do you know what I mean? So it's that whole thing of just covering your ass, man. Like, because who knows what's going to happen? You know, fucking France might go and nuke America tomorrow. You know, like, might send the value of the euro through the thing. Someone might know about that and be fucking planning their trade already. Like, who knows? Like, but yeah,
cool, thanks, man.
Like, it's just being aware of, like, a bunch of different scenarios, basically.
Sweet, thank you, Matt.
No worries. Don't trade what you see, not what you think. Yeah, exactly. Exactly the same. Right, like your job as a trader is to react to what the market is showing you rather than trying to predict what it's going to do, right? Like, even the first short this morning is a good example of that, right? Like, yeah, okay, it's not the safest trade in the world by any stretch of the imagination, right? But we have seen, you know, this low has been tested and we've broken this low at that point in time. Right, we break that low there, so, you know, we can expect some form of continuation to the downside. You know, it's just reacting, saying, okay, well, what is going to happen here? Yeah, Mihai, are you trying to ask a question, dude?
Just made it through the ends in the encyclopedia.
No,
I
what?
Let me know if there's anything I can help you.
But that's my question.
Okay.
Yeah, sorry.
Oh, no worries, dude. No worries. But yeah, like react to the fact that the market gives you a nice entry here, right? Take the trade, but yeah, partial it. Yana, yes, what's up?
Just wanted to add, because I like the fact that you said it's not a very safe trade, or I know you said not the safest trade, and I feel like you've actually brought more consciousness into the fact that it's not that I hesitated, but I criticize myself for wanting to take a not so safe trade. But, it also brings me to the thought of very often those actually work. And, very curious to hear your perspective on that, because sometimes it's this thin line in between, okay, we actually seek for a lot of confluence. And then on the other hand, it's like, no, we really know what we're doing. And there is nothing wrong with taking this without waiting for that, extra confirmation.
I think you all know my sort of views on that. Like, I'm if something's valid, more than likely you're probably going to find me trying to trade it at some point or another. Like,
it's like,
exactly. Like, exactly. Like, honestly, like this morning, right? I shorted this, took 80% partials at like 1 to 10, then missed that nice long. Took some fucking, I don't even know how I made this up, but yeah, I managed to make up a trade from like the high, where is it? Up here, I somehow managed to find a short in here. That ran to like 1 to 8 there, or 1 to 9 there, where I took 80% partials. Like, yeah, it's not the best trade in the world. It worked out today. Like that gives me another 8 losses, right? And then took 2 more, or took a loss and a break even getting into the next short and missed the good short because of the puppy, right? But yeah, for me, I will be more aggressive personally, but that's me, right? Like I really don't mind that. I think, I know that my edge and my RR pays me enough that I can afford to take hits, and they don't bother me that much psychologically. I'm just like, oh, whatever, move on. Like I shorted something stupid last night, or yesterday afternoon, like something. Am I getting the trade? Over here somewhere, I found the trade, right? And like someone was like, aren't you worried that like at this point, someone was worried, like, aren't you worried about these equal highs? I was like, yeah, I'm getting fucked on this trade. This is what it is. I took the trade. I accept the risk. Move on. Trade's managed. Trade's done. And I ended up break even on it, which was lucky, but like, hey, it's a loss. So trading's not about being right and wrong. Right? It's about winning and losing. To me, they're 2 different things. Right? Because we're playing with probabilities, we're not playing with certainties. Right? How can you ever be right about something that's you can't be certain about? Do you know what I mean?
Yeah. No, absolutely. Thank you. No, it's a good affirmation for me, because I think like naturally I'm much more inclined to risk entries. I have no problem with them, and most of the time I do spot those good ones, even in counter trends. The fast ones that just like push back quickly to the supply or demand zone, and then start giving like a gradual movement. And I think it's just allowing yourself to be a bad bitch. That's all I'm taking from you.
Exactly that.
No, that's cool. Thank you. I think it's really sometimes you're like, oh, maybe I should stick to the rules, but then you're just missing the good stuff that comes to you naturally.
Yeah, I mean, like whatever you do, I would have rules around it. Right?
Yeah, no,
like I'd have like, but yeah, they don't have like trading has to make sense for you more than anyone else. Right? Like it's like all of you that. Like when we were at Phantom, right? Like a large majority of us were at Phantom, right? One thing I used to try and tell people is like, if like, some people would have a call with me and then go, oh, but I don't like, I like this thing that Alex Tricky's looking at. So great, go and look at it. Like you don't have to do what I fucking do. Like I trade the way I trade. If Alex has got something that you think has value, 100% go and look at it, because he's a fucking sick trader. You know, like if you say something to me, someone asked me about today about like fixed range volume, right? I was like, no, for me, I'm not going to look at it because, you know, for me, FX volume is a bunch of nonsense. But if you can make it work for you, then use it 100%. You know, trend lines fucking work for you. Use trend lines. You know, like, who gives a shit?
Yeah, I mean, I guess it comes to be good and then break the rules.
Exactly. That's it. Like, find consistency first, right? Find an executable edge that you can repeat over and over again, and you know will get you to whatever goals you have, whether that be 50% on your personal a month or whatever, or getting funded, or, you know, whatever your goals might be. But find an executable edge that is consistent enough to get those goals, right? And then once you've got that, then start back testing other stuff, right? Like the reason I've got to this sort of stage that I'm at now, so I haven't changed my edge for like since the beginning of the year. So what's that, coming on to 11 months now? I've added shit, yeah, but I haven't changed it. Like I've traded GU probably 10 times this year. You know, like mostly I trade EU, mostly I trade the same shit. Right? Yeah, sometimes I do something dumb and you see me post and say, yeah, this is dumb and I don't know why I did it. You know, we all do dumb shit. But yeah, mostly it's just trading the same edge that I know works again and again and again.
Yeah, absolutely. Well, thank you for this. Very affirmative. So
no worries.
Sam, I want to ask you something on 4 hour.
Yeah. On 4 hour?
Yeah.
Yes.
So now, do you know, obviously we've not tapped the discount of the daily leg yet. And we've had like this 4 hour solid push which failed to break the low.
Mm-hmm.
With it having like no clear inducement before it, could you see a push? Because I personally, the reason why I'm not looking for shorts is because I see it as being used as liquidity for like to mitigate something higher, to like tap into the discount of the daily leg.
It could, yes. It could be. It's just the aggression away from it.
Yeah.
You know, it's just thinking about it in like monetary terms, right? That costs someone so much money.
Yeah.
Like to dump like that, you know, and this level here does actually make a lot of sense as well. When you actually go and work it backwards, right? You've got this really nice 12H supply, right? That breaks the low. Right, like flips the low as well here,
yeah.
Right? So it makes a lot of sense for that to follow through and break this low. Then what we may see, right, is then we'll see, you know, like a possible, I don't know, say we come up to, that looks good. I think that's a daily OB as well. But like, then it's like trying to think of it in this bigger picture play again, right? Like, I mean, if you look at that just on 2 day, does that look like it's going to get taken? To me, no, right? Like, we haven't seen anything commit to the upside yet either. Do you know what I mean? Like, this is, if you look at this whole thing, how often do you see price action like this, followed by this, follow through and take that high? Not that often, right? Do you know what I mean? It's like clearly we've had that impulse correction. Like if this high goes, if, you know, this supply here goes, something like that, then yeah, maybe. But right now, I would be far more inclined to say that this low is going than this high is going.
Yeah.
That would be my personal view on it, mate. It's just about, like, it's that whole focusing on the most recent stuff rather than the stuff to the left, right? Like, if we look at that from, you know, like a 2 day perspective, did this really create? I mean, broke this, right? But this is now, you can say this is now also created because it broke this, right? Like, and we're bearish over everything. Again, what are we coming off over here? Thin air, pretty much.
Yeah.
Right? Like, more likely, I'd be expecting, you know, something down here yeah, exactly, something within here to get mitigated, and then potentially see that like weekly pullback into something up here, right? Because now what they'd be doing on weekly is generating liquidity for the future mitigation of this, right? To continue, or the future mitigation of like this, you know. But yeah, like that's what I'd really be looking at, like, because within here, this is our last like break of weekly, like really significant break of weekly structure that we never mitigated. So, you know, we've got like, this would be our first level that we look at within there, right? Prices potentially what we're seeing here, you know, if we're not focusing too much on what happens to the left, potentially what we're seeing here is impulse, complex pullback into another impulse that breaks that high over there, something like that, you know. That's one possible scenario.
Yeah.
Right. But it's just trying to think of it like from that perspective, you know, like, yes, okay. The one thing, right, like if we stack all the confluences at the moment, right, what do we have? We have, right, a huge run on liquidity that has led to a break of structure. Yes, we haven't seen the logo yet, but we've also seen no change of character within this leg, right? So this is still very much bearish order flow, right? Now we've seen a change of character back as well, so likely that's going to continue, right? The only thing that we haven't got going for this running this low is the fact that it's not coming from premium. Right? That's it. Right? Which is a valid argument, yes.
Yeah.
Right? But aside from that, everything else would suggest that that low is going to get taken. To me, anyway.
Yeah, fair enough. No, I appreciate it.
No worries.
No, I was only asking because I just want to get, like, I'm trying to get my higher time frame like narrative a lot better than what it was.
Yeah, I think so. From tomorrow, we're gonna start jumping on. What time is New York open at the moment? Is it 12 or is it 1? I can't remember this week. I haven't really looked at sessions because I know they change when.
London is 12, and like in the UK it's 12 at 12.
Yeah, at 12. Yeah, that's what I thought. It's an hour earlier than normal, isn't it? So yeah, we'll try and jump on like around 11:30 or something, and just run over a bit of price action. Just say, you know, what are you guys seeing? What do you expect? You know, but it's always like with a story, just try and build it from those three, like in that 3-tier thing, right? Structural idea, supply and demand levels to support that, liquidity to support both of the above.
Yeah.
Right? Because the structural idea here would be that this low goes, right? Because we've seen this huge, like this major low here get taken. So now, in theory, this low goes, right? Liquidity would suggest that we don't have an absolute ton of buy-side liquidity available at the moment because we ran all this. Yeah, we have this not beautifully formed high, but it's still decently formed, right? So we have this high here. Structurally, we would expect a low. Liquidity, we've taken this, we've generated this, so we're now probably building for a future run to lower prices. Supply and demand, yeah, this isn't looking the best, but we do have we created 4-hour supply here, right? When we changed character, when this wick became 4-hour supply.
Yeah. I also wanted, like, if I was to take shorts, I wanted the EQ of that wick. That's what I was waiting for.
Yeah, fair enough. I get you. But then it's just looking at like the other mitigation stuff, isn't it? Like,
yeah,
here we've got like why does it need to come to the wick of the 4H, right? Like there, right? When the supply level is there.
Yeah.
Yeah, this is definitely an entry.
Yeah. That to me is like a textbook trade.
Yeah.
I actually sent Lewis a picture of a limit I had on that, and it missed by like a tick.
About this foil, like this week's, but the candle like is the buy to sell is the candle is not engulfing.
No, but what? So right, okay, let's look at this like this. You can't see it on the fucking thing. right, this will be a buy to sell on a different time frame, right? You can see here we've got this buy to sell price action, right? So if we keep going down on one time frame, well, it's probably going to be like 90-second or something like that. Yeah, we don't actually have an engulfing candle, which is annoying. What time frames don't I have here?
On 32 minutes, I think it's one.
32 minutes. Yeah, that would make sense. Yeah, there we go. There's your supply.
Yeah.
Right, so then the last, like when I say buy to sell wicks, right, is what I mean is that last buy to sell price action. So here, what we've had, right, is this push up, right, which is culminated in this wick here, right? It's come down, and these wicks are this, right? So that you're engulfed buy to sell. See what I mean? Make sense?
Yeah, thank you.
Yeah, no worries, man.
Sam?
Yes.
You know, you just used like the fib tool, like with the 30 and 70, and you just sort of measured the higher time frame structure. What does it like? In what cases? Like, what does it help you see, or why do you do that?
Mainly, it's so your highest probability trades, right? Say in this leg of price, right, or in this leg. This is a great example, actually, right? So here, your highest probability trades are always going to be.
Oh yeah.
In this top part and in this bottom part.
No, that bit, yeah. I think you just implemented it on a very wide. I think it was on a 4 hour, and you use it like
on this wick. You mean here to here?
I don't know. You just use it on a whole bigger picture.
Here to here.
So I wondered, but it's okay. Yeah, you just marked up.
It's always it's just like always the highest probability trades, like, because this would be your whole daily leg essentially, right? So realistically, like what I was expecting initially was price to come, you know, like after we had this push, I think me and probably half the fucking world didn't expect this low to get taken quite like this, right? Like what I was expecting was another sort of complex pullback down into this to then continue up to something up here, i.e. this range, right? For then price to continue and completely melt through, which still could happen. You know, it's not saying that won't happen. It's just saying right now it doesn't look likely, right?
So you implement it on a larger scale, the same way we implement it on a smaller range.
Oh yeah, I use it on everything. Yeah, like anything we ever say about anything is as applicable to the 1 second time frame as it is to the yearly time frame. Like literally every single bit of information. Nothing ever changes, just the speed that it happens changes.
I see. This makes a lot of sense now. Because I would implement the entries, as you just started explaining in the beginning, with like the top and the bottom on like let's say the 1 set, but I wouldn't do it on like a 4 hour. But now I see what you mean. Makes sense. Yeah,
it's all how like we want to build like higher time frame narrative, right? So that then gives us the thing to take those lower time frame entries, basically, right? Like getting on the right side of the market. You know, it's why, like, I think we were having a bit of a discussion in the EU chat this morning, and some people like, would you be looking to buy up to premium? And for me, it was like looking at this, like, nah, definitely not, because this doesn't look like it's going to push, right? So once we see that go, then I'm happy to short, because higher time frame narrative is now bearish. Yeah.
Yeah, no, absolutely. It's amazing. I remember at the beginning, I liked comparing it to the Russian babushka dolls, like they're right of the other.
Yeah, exactly.
Layers.
Yeah, exactly. It's just multiple layers, right? And it's why it's so important not to lose focus on that bigger picture play. You know, like It's what like I have that written on the top of my screen, right? Like focus on the bigger picture play. It's always the most important thing to me. Right? Like that's why I'll get in this and be confident to like hold this up to, here, right? Or why I'll get in this, but I'll know that this I need to target because I'm aware that the higher pitch players that this comes to here, right? I think I stuck. Lewis, how far away was that entry that I sent you? It was like a tick, wasn't it? Something like that. I think I used.
it was about 10 pips away.
I went for. Fuck off, mate. I will come and get you. I think I used that. Yeah, I used that, and it missed me there like that. So I had puppy training, but I was pretty convinced that was gonna run. My stop was a bit bigger than I would have liked it to be, but that's life sometimes. I don't really use. That's why I don't use limits, but yeah, because that trade now runs 1 to 10, where I got 1 to 10 out of that trade this morning for a much smaller move that had my risk on the table for a lot less time. But yeah, but that's because I've built that story down, right? It's like, okay, well, as soon as this doesn't follow through and take the low, you know that if the low is going to go,
Yeah, no, and seeing that bigger picture, so being able to use the same tool on like the higher time frame, I think I'm just realizing it can be like for me, I'm still struggling to take the bigger trades, but in the longer run, it's actually probably the one of the best tools to understand how far you can go with it.
Yeah, exactly. It's always the way you try and think about it, right? Is every time you enter the market, you're taking on risk, right? So in theory, like the less you can trade with the higher RR, the better your whole trading portfolio is going to look, because you're going to be taking less risk for higher reward, right? So you need a lower strike rate, even though your strike rate is probably going to increase because you're taking better trades, because you're focusing on less trades and only looking for those really high probability trades, right? So yeah, it all works very well in the end. But yeah.
Yeah, absolutely. Okay. Lovely, really lovely. Makes sense.
Yeah. Cool.
Sam.
Yeah. Yes. What's up, brother?
I've got a question for you. On your H4, it is it is and it isn't structure. On your H4, you had something as I did write it in the questions, by the way. You had something as your supply. Do you want to go back to your other chart? You've already got it on there.
Oh, okay. Oh, no.
No, sorry, I meant your other one. The one that you was doing all the training on. That one. So on the H4, before it dropped, let me annotate. The H4 before it dropped, I was watching what you did, and I've been following the videos that you've done. So would I be right in thinking that this actually area from there to there, before it broke, all that would have been your demand range? It then changed for the first time when this happened, and it was this move that broke through.
Yeah, exactly. So that range now becomes your supply range.
Yeah, got it.
Right, like this to this, like this would have been like the more refined range, right? Like essentially you've got this whole thing here, right? This to this is your whole sell to buy that breaks high, right? But this, you can refine it down to this because it's clear, but no inducement, blah, 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 whatever. Right? So once that breaks, then that's supply coming back in control in a bearish market, right? So it's that whole alignment stuff again, right? So now we've got structure and order flow stacked on top of structure and order flow. So everything's bearish, everything goes to hell, and EU melts 150,000 pips, and we all make millions and sit here laughing. Yeah, sound good? Yeah, but that's the whole idea. But does that sort of cover anyone's sort of structural doubts, stuff like that?
There's one question from Pete on the chat.
Oh, okay.
Have a little look at that.
Quick question about S-Man. Would it it's contained within some leg in a CT through that leg? MBOS is contained in CT. No, because MBOS isn't always pro-trend, right? Like, I think we should just change it to fucking internal structures. It's all just internal stuff. But yeah, like, so say we have a bearish trend like this, right? But we have a little minor high here, right? Then that is a break of minor structure, but it's counter trend, right? Now we see price come up like this, then we see a break of this low here. This is a break of substructure that's pro trend, right? So don't think of it as pro trend and counter trend. Substructure is contained within the previous leg of price. Minor structure is something in a leg of price that is to the left, right? So this, like now, if we said this, right, this would be minor structure because it's still contained within this leg, right? But now we see like this would be minor structure. So this would be substructure, this would be minor structure. Can't we just use internal structure? Yeah, I think we probably should, to be honest. I'll try to think of a bit of a different way to phrase it. But yeah, it's like, because it's all like internal structure, right? Like the main structure we want to focus on is swing structure, right? That's the most important thing, like swing legs of price. Everything else is internal and is more viewed as order flow rather than anything else anyway. So yeah, maybe we'll change it to that, because I think we do maybe it unnecessarily complicates it. Because sometimes like a pro trend sub break of structure can be just as powerful as, if not more powerful than a substructural break of, than a minor break of structure to the left, something like that. But yeah, I'll have a think about how to reword it. But yeah, that's the difference, mate.
I think that's it for questions.
Yeah, sweet. Cool.
Thank you, Sam. We love you. You rock.
No worries.
Yeah, I don't know about that.
Fuck you, dickhead.
Good.
And again, yeah, me and Lewis are definitely going to be up in London this weekend. So if anyone's around, give us a shout. All right. On Friday night over in Shoreditch. It'd be great to see some of you. Yeah, cool. Take it easy, guys.
Yeah, that'd be great. See you
soon. Sweet, take care. We'll see you tomorrow.
See you tomorrow, guys.
See you later.
Last one, boys.
See you later. Bye.